Hello and welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report from Monday, August 8th. So today we had very little volume, very little movement whatsoever, and this week we have very few catalysts in which to push around the markets. So let's take this time to look at where the S&P is right now and then go over the sector spiders and see what's moving and what's lagging. Now, first of all, the reason why I use different charts with different time frames here is really to look at the fractal patterns. Now, when I say the word fractal, what I mean is patterns within patterns. Let me show you an example of this. So first of all, if we just look at this move, which is pretty much the beginning of 2016 through now, what we're seeing is this very characteristic S-shaped curve where we come off of a bottom in a very strong fashion, get caught up sideways through the middle of it, and then end up nearly vertical in what I call a parabolic tail. So this is very, very consistent, and usually at this point, up at the top, wherever this stops, so I'm not saying it's necessarily going to stop just yet, but typically this is where we get into the very noisy topping pattern. So that's the weekly chart. Now, if we go to the daily chart, we can see kind of the same things happening within there in the same time frame. But let me show you what's happened approximately since the Brexit. We're getting a smaller time frame version of the same type of pattern, very strong off the bottom, kind of sideways near the middle here. And then we're starting to see the stock inch higher like this. So I don't think this is necessarily done just yet. We may still have some price to go yet to the upside. Maybe we're going to retest 220, or in this case, test 220 for the first time at 2,200 on the full S&Ps. But you can see how this shape is kind of a smaller version of this larger shape that has taken 8 months to play out. So even today was a red candle, although it was a very small range red candle with essentially advancers minus decliners fairly flat, so really not much to speak of in terms of this. This to me, I doubt very much that we're going to be dropping with any intensity at this point. If anything, we'll see the volatility start to increase before that happens. Remember, tops are a process and bottoms are an event. So tops are a process means that we see usually a lot more volatility kick into gear before it starts to move lower. Whereas bottoms are an event, which means that these are kind of a singular thing. They occur, and especially in this market with central bank policy, almost as a V-bottom these days. Okay, so those are the spiders. Now let's go over to the sectors of the spiders. And we'll start with the financials. The financials are sitting here pretty much in a large consolidation pattern. Now what I am seeing here, and you can take these patterns or you can leave them, but basically what we have here is what I'm seeing as maybe an inverted head and shoulders. Now I haven't seen a regular head and shoulders work for a long, long time. So for pretty much this move here, starting in 2012 and beyond, we haven't seen head and shoulders patterns work at all. But we have seen the opposite happen where we have the chart setting up with a major higher low here, kicking off that right shoulder on the inverted basis. But you can see on the financials how far in the hole that they are, and this is because of a lot of regulation lately and the fact that we have basically still 0% interest rates out there, meaning that the banks really have very little spread to work with on here. If we start to see potential rate hikes in the horizon, we are going to see this gap between the recent highs and today's price. We're going to see this start to get filled in because we'll start to see the market starting to discount in the fact that the financials have more spread to work with. Okay, here's the XLK with technologies, and for whatever reason, this one is well behind other technology type indices like the Qs and the NASDAQ composite, and this is due to the composition and rotation perhaps. But what we're starting to see on the weekly chart here is a very linear move, and linear moves typically do not go for very much longer in this area. So what I would expect to see is maybe some sideways to down consolidation showing up here. And this is going to show up on the daily chart as more volatility. So it's going to seem like a big burst of volatility on the daily chart if this kicks into gear, which is going to scare a lot of people. But again, this is very, very normal for what's happening here with such a strong move coming up off of the British exit bottom. Looking at materials, this one looks actually pretty strong, and have shifted into a weekly uptrend at this point. And I like this little consolidation pattern here. This looks really good. So if the price is able to break out above 49, I think this might be a nice long entry to make a shot coming up here to 52. Now, just for grins, let's go over here to the option chain and see what kind of volume and open interest, see what kind of liquidity. And here's the problem here, is that just not a lot of liquidity. So we have fairly wide spreads on the XLB, which is really too bad because this is a nice looking instrument. And so we may be forced into playing something like the true monthly options for this trade. So we wouldn't be able to necessarily dial in the periods correctly for some of our trades. But the XLB looks like a good breakout candidate right now. Looking at the XLU, starting to come down a little bit, a lower high setting up on the daily chart here. So lower high, lower low. What this means is that we're seeing a pullback here and probably going to be pulling back to about the $50 price point here. So just coming a little bit off the highs. And this is a problem anytime we see a chart starting to go completely ballistic, totally vertical like this. This is, it can lead to a lot of volatility as the price has a difficult time on the back slope of this rise. Now, where I would look for that is if the monthly chart actually got down to a linearity of this level here, where we've seen it have difficulty in previous years. All right, here's the XLP, or consumer staples. This thing is unstoppable right now, and it's just kind of grinding higher in a very controlled fashion. So the dip buyers are out in force on the XLP, and really no patterns. I don't like buying up at these highs without a significant pullback, so there's nothing that I can play on the XLP. It's just heading higher right now and not allowing anybody on board. Here is the XLI, or the industrials, and it looks surprisingly just like the Dow Industrials and has the same exact patterns here. So this is, again, looking good. Nothing wrong with this, although I don't like buying up at the highs. So looking for more material pullback, or maybe even something setting up for a put credit spread if it pulls back hard enough. Here's the XLE, and we keep watching for this one to perhaps break out above these. Now, some of the member components of the XLE have started to break higher a little bit, so this is worth watching. And so what we're looking at here is a tremendous amount of potential energy to trend from some of these indicators here, showing that we've had a lot of nonlinear energy, a lot of consolidation. And this is where the spring gets wound up tighter and tighter and tighter until it finally breaks above here. So I'd want to see XLE break above about $72 per share to show that this truly is changing polarity up to the upside. So a lot of potential here on the XLE. Now we're getting into healthcare with the XLV. And again, no real issues here. We've had a fairly rocky end of 2015, early 2016 again, but it's reclaimed polarity back up to the upside on the weekly chart. And nothing really wrong with this chart right now. Again, big consolidation period here on the monthly chart, which bled over to the weekly chart as well too, but it's still heading higher. The trend has not been interrupted. And so we'll finish out this view by looking at consumer discretionary, or that stuff that we buy that we don't really need, but we buy anyway. And the price is jammed up against the all-time highs right now and consolidating. So again, looking for a big breakout. You can see this is a massive amount of just non-linear consolidation behavior over the last year or so. And when this thing finally does break from this range, it's going to be a fairly powerful move, whether or not it's to the upside or could start to reverse to the downside. But before that happens, we'd have to see this start to reverse from the smallest time frames. And right now, it's just not showing that. We're consolidating right under 82, and I would expect to see a break higher from these levels. Okay, so that's kind of our tour around the sector spiders here. I don't see anything particularly bearish at this time, even though we are at all-time highs for most of these. I would say the sector with the greatest potential to the upside might be energy, which has been beat down for all these last couple of years and may be ready to start moving higher. Also, looking at the financials, seeing if the financials will have some spread to work with in the near future. A lot of that depends on what happens with the U.S. economy, jobs, and whether or not the Fed decides to start telegraphing that rates will be rising in the near future. We've been down this road before without result, so we'll see whether or not, and this will happen on the September 21st meeting with the Associated Press Conference, and so it'll be interesting to see if the September jobs number continues to go higher. If the September jobs number continues to go higher, we should start to see a much higher probability of raising rates in September, which is still fairly low right now. And because of that, I think the financials will start to rally. So again, a couple of sectors that we can look at to perhaps play long. The rest of these jammed up against all-time highs. Not on your life. I will not touch these at all-time highs. That's it for today's report. Thanks for listening, folks. We'll see you tomorrow.